How y'all doing, good people? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Give me 1 second, guys. All right, I'm back. See, that was a test just to let you guys know that I'm in the dream home. I'm not in some, one of them little backdrop things where I don't know the terminology for it. You know how you have a little thing like a green screen. That's right. This ain't a green screen. This is the actual dream house, because I know a couple people down in the comment section. Well, that's a green screen. That's not your real house. That's not your house. No, this is my house. See, I just walked away and walked back and poof, it's the real house. So welcome to the channel. Welcome to another video. Welcome to another Q&A with Richard Fain, where we're going to talk about today this great wealth transfer that's happening in 2024. And really, what can you do to take advantage of it? And then I'm going to be answering some questions. Now, as we do every Sunday, and I tell you guys this every Sunday, the best way to get your questions answered are through Super Chat. Now, I don't know how many people gonna show up in the live stream today. It could be 100 people, it could be 1,000 people, right? Who knows? As more people come in, and we're going to probably be in here for a couple of hours. So as people come in, you're going to get more questions. Well, I'm going to get more questions. And, I got to figure out a way to be able to take on these questions. And normally it's through Super Chat. So if you want your question answered by me, then consider doing a Super Chat along with your question, and that way you'll get your question answered. Without the Super Chat, I'm not saying I won't answer your question, but it'll be a lot of questions. I'm just letting you know. Like I said, we could have 100 people in here, we could have 1,000 people in here. And if we get anywhere close to 800,000 people in there, it's gonna be a lot of questions. I'm not gonna be able to get to all of them. Only ones I'm able to get to are the ones that are Super Chat. So just keep that in mind. Again, I'm not saying you gotta do a Super Chat, I'm just telling you, that's typically the way it ends up. So if you're stopping by for the first time, do me a big favor, guys. Go ahead and consider subscribing. You don't have to, but if you want to, subscribe. Definitely hit the thumbs up button for me. As people start getting in here, hit that thumbs up button for me. It just lets me know you guys rock with these live streams and the Q&As, because y'all know I do the Q&As every Sunday. And I'll do them every Sunday until May, when I start the live streams in the membership club. Once I go to the live streams in the membership club, which will be in May of this year, next month, then I'll still do, the live streams on Sunday. It just won't have a Q&A component to it. Similar to what I do Monday through Saturdays on the live streams, there are no Q&A component to it. Normally I do those on Sunday. Those will be going away in May once I start the membership club. Having said that, do me a big favor, go down to the description box, click on that Instagram link, and give me a follow on Instagram if you don't mind. Trying to get the new Instagram page, trying to get that up and running. Our old Instagram page, Richard Fain 28, was disabled by Instagram for whatever reason. So Richard Fain Millionaire Mentor is the new Instagram page, and we're trying to get that one built up. So if you'll do me a favor, if you're an Instagram person, if you're not an Instagram person, don't worry about it. But if you go to Instagram, you have an Instagram account, you follow people on Instagram, you want to see more of me outside of YouTube, then go give me a follow on Instagram. Like I said, the description box down below has the Instagram link, and it's Richard Fain Millionaire Mentor. Give me a follow. I certainly would appreciate that. Next thing is, if you want 10 free fractional shares of the Magnificent Seven stocks, Mumu is going to give you 10 free fractional shares of the Magnificent Seven stocks. Now that link is the first link down in the description box. A lot of you guys are rocking with me on Mumu, so thank you. You've made your deposits, you've gotten your free stocks, or your free stocks are coming. And now you're positioning yourself to really take advantage of this great wealth transfer that's going to happen in 2024 that we're going to be talking about today. Without having a brokerage account, guys, you're not ready. You're not putting yourself in a position to win and win big when it comes to paper assets. You need a brokerage account, right? You need a brokerage account. And no better brokerage account, self-directed brokerage account out there than Mumu. I use Mumu as my primary self-directed brokerage account where I buy my assets. What we're going to be talking about today, what I'm going to be buying starting tomorrow, which is Monday, April 22nd. Those assets that I'm going to be buying that we're going to be talking about today, that's what I'm going to be using. I'm going to be using the Mumu account to do that. So if you want to rock with me and join me, and many of you have, so thank you very much. And hopefully you're going to be ready tomorrow to buy assets. Guys, it's starting. I'm going to walk you through why I believe tomorrow, April 22nd, 2024, it starts. We're already setting the stage for it, right? The stage has already been set for us to double and triple and quadruple our net worth over the next number of years. But if you don't have a brokerage account, if you're not serious about putting money in that brokerage account on a monthly basis to buy assets, you're wasting your time here. That's all we're going to talk about today is that. And that's all. So be prepared is what I'm saying. And the only way you get prepared is you got to have a brokerage account. So get down in the description box, click on the Mumu link, open up your new Mumu account today, go get the 10 free fractional shares of the Magnificent Seven and get ready to go. Get ready to build some wealth. Get ready to double, triple, quadruple, 5x your net worth. It depends on you, how much money you want to put in and how patient you are, right? The last thing before we dive in to the conversation and discussion today in the Q&A is the new website, Richard Fain Millionaire Mentor website. I launched it on Monday, April 15th. And guys, I got to tell you, thank you very much for the overwhelming support from you guys. The website, people going to the website is in the thousands and thousands and thousands. I think right now we're probably up to, 25,000 people that have went to the website since we launched it. And again, guys, you're talking about, just me. There's no ad revenue. There's no ad spend that I did to Facebook or YouTube or anybody like that. I just tell you guys about it every day on the live streams. And I mentioned it in my edited videos, and you guys have flocked to the website. Now, the website link is the second link down in the description box. Right under the Mumu link, you'll see the website link. So go check it out. Hey, man, I think it's some wonderful digital products on there that you can make an investment in yourself and get yourself to wealth, right? Information is powerful, but it's only powerful when you use it. You going out gathering a bunch of information, never use it, it's worthless. It's just a bunch of stuff in your filter system that you're not using. So when we created the website, when I say we, I'm talking about me and my daughters, my two oldest daughters. When us three created the website, I told them, look, I don't want no fluff. All I want in the website, I wanted to be clean. I wanted to be crisp. I wanted to have digital products that people can go make an investment in themselves. And then more importantly, I wanted the membership club. I want them to be able to join the membership club where they will have exclusive content from me that nobody else will have. I want that. I want to be doing exclusive live streams once a week for 90 minutes, once a week for 90 minutes through the membership club. There will not be any Q&A live streams anymore through YouTube once the membership club gets kicked off in May of this year. So I want you guys to consider joining the membership club. And like I said, through the website, you can join it. There's a link in the website where you can join the membership club. A lot of you have already joined. We got a bunch of folks that have already joined the paid membership club. And again, guys, this is about getting you to your financial freedom, helping you get there, right? But again, my time has some value associated with it, just like your time has value associated with it, right? You deserve a right to be compensated for the time that you spend helping whoever you want to help, if that's what you want to do, right? I'm just telling you, on the YouTube channel, which is my biggest platform, it's free. Nothing. There's nothing you got to do on the YouTube platform other than just plug in and take the information and execute. But anything off the YouTube platform, right, I'm doing that to help folks, but I also have to have time associated with a value associated with my time when it's off the YouTube platform. YouTube will still be the biggest platform that I'm going to be on. But see, the Instagram page, the membership club, places like that are for people that say, hey, I need more of, you know, somebody emailed me today and said that, not emailed me, but they dropped a comment and said, no fame, no gain, which I thought that was pretty cool, right? I was like, man, that's pretty clever. No fame, no gain. That's kind of how I look at it when I take myself off of the YouTube platform. When I take myself off of the YouTube platform and go to the membership club, or if I go to somewhere else that's not on YouTube, yeah, that's people who have made a personal decision to seek additional information from me and have a more closer, more exclusive relationship with me from a financial standpoint. YouTube is where I'm at every day, right? But I'm starting the process of starting to build out some different platforms outside of YouTube. And the membership club is one of them. And like I said, there's going to be some exclusive content there. We're going to be doing the live streams that I won't be doing anywhere else but the membership club starting in May. So we'll be doing the live stream Q&As. Now, I'll still do live streams on YouTube every day, but they won't have a Q&A component, and they won't be covering the same material in depth like I will be doing in the membership club. So get over to the membership club, check it out. Sign up if you want to. Check out the digital products. Grab a few of them if you want to. And let's rock and roll. So this whole concept, guys, of the great wealth transfer of 2024. Here's the concept. Be ready. Be ready. Be ready and positioned to start buying these assets starting Monday, the 22nd. Here's what's happening. Here's what's happening. We're starting to see a correction in the stock market. And I went through this in depth yesterday, so I'm not going to rehash everything that I went through in yesterday's live stream. If you want to know in depth what I'm talking about, go look at yesterday's live stream. I broke it down from A to Z. But the concept is this. We're starting to see a correction in the stock market, right? You're starting to see your major ETFs, your major individual stocks starting to see a correction in their stock price. Take a company like NVIDIA. It's all the way down to $762 a share, guys, from a high in March of $950 a share. So you're down almost $200 a share. There's nothing material that has changed about NVIDIA. Nothing. In May, they'll be rolling out their first quarter earnings report. If that earnings report beats expectations, there's an opportunity for that price to go back up per share. We don't know what that report will reveal. My point is this: NVIDIA is on sale, VGT is on sale, VOO is on sale, SPLG is on sale, FTEC is on sale. Everything is on sale right now. So what does that mean for you as an investor? It's an opportunity for you to buy the greatest companies and the greatest ETFs in the United States, in the world, on discount, and hold them. That's why it's a great wealth transfer. You transfer wealth when you can buy assets, great assets at a discount, and you hold those assets till they trade at a premium again, which they will. How do you know? Because the stock market, the history of the stock market says they will. They have to. Investors will be back. So get yourself in a position to be prepared to take advantage of that starting tomorrow. The great wealth transfer of 2024 starts tomorrow. But you got to have the right mentality, right? You got to be able to get into this thing, and you got to be able to hold those assets for a period of time. Y'all know over the next 10 years, that's what I'm going to be doing. I'm going to be buying these assets every day, every month, every year for 10 years. I got 10 more years in the stock market. For some of you folks, you're just starting out. For some of you folks, you've been doing this for a while. I've been doing it for a while, but I got 10 years left. And I think these next 10 years, I'll make more money in these next 10 years in the stock market than I had made in the first 25 years. Why? Because I know more. See, at 26 years old, I didn't know anything. At 56 years old, I know a lot. So I'm gonna take these next 10 years and like I keep telling y'all, I'm gonna double my net worth. So the net worth that I was able to acquire from 26 years old to 56 years old, that's one net worth. I'm gonna take that net worth that it took me 25 years to accumulate, almost 30 years to accumulate, I'm gonna double it in 10 years. So it took me 30 years, I'm gonna do in 10 years what I did in 30 years. Why? Because I know what's getting ready to happen, and I'm positioned and I'm ready to buy. But without a brokerage account, without any money, without a good behavior with money, you're not positioned to do that. That's the whole point of this. Get yourself positioned. Like I said, if you got questions, guys, we already got almost 300 people in here, and we're 17 minutes in. More people are coming in. So all I'm telling you is, if you want your questions answered, you got to go through Super Chat. That way you're at the top of the question list, and boom, you're ready to go. This is a Q&A. I'm here to answer questions. But again, as people flow in here, just know it's going to get a little bit clustered, right? So that whole concept of preparing yourself, I have people all the time who will email me, and they're brand new. And I know they're brand new at investing, and they'll say, hey, Richard, I watched your video. I signed up for Moo. I put my $100 in. I put my $300 in. I put my $1,000 in. What do I do now? And that's a fair question, because they're brand new. So I tell them, I say, well, here's the thing. You need to decide what you're trying to accomplish here. What do you really want to get out of taking $100 a month, $500 a month, $1,000 a month, and putting it into these paper assets over the next 10 years? What are you really trying to accomplish? Some people will say, well, I want to accomplish generational wealth, where I can be able to pass on, these paper assets to whoever. Some people say, hey, I want to be able to create an income for myself, so when I get down the road and I got this income I can lean on. And guess what, guys? You can accomplish both of those things. But you can't just stop there. You can't just say, hey, I want financial freedom. You can't just stop there. You got to actually be really specific on what financial freedom means to you. That's how this whole thing works. That's the only way it will work. And I'll give you a prime example. So for me, it was like, okay, I want to have $10,000 a month coming in from my paper assets, from my investments. I want them to produce and generate $10,000 a month. So I had to figure out, well, okay, I got this $10,000 a month idea in my head. That's what it would take in order to take care of my lifestyle, right? I got this $10,000 a month number in my head, but how in the world do I create $10,000 a month by buying these paper assets over the next 10, 15, 20 years? How do I do that? Well, number one, the asset itself creates the 10,000, right? So you got to get the assets to a certain level. So I had to figure out what level do I need to get the assets to for them to generate the 10,000. And that's the exercise you got to take yourself through. You got to say, well, okay, Richard, I'd like to have $4,000 a month at a certain period of time. Let's say over the next 10 years, you want to generate assets sufficient enough that they can throw off $4,000 a month for you, which is $48,000 a year. Now, I use the rule of 200 to help me figure that out, right? There's no fancy spreadsheet or some, complicated analysis I have to do. I can just simply use the rule of 200. And the rule of 200 simply states this. I take the $4,000 a month and I times it by 200. I take the $10,000 a month and I times it by 200. I take the $5,000 a month and I times it by 200. That will tell me, doing that simple rule of 200 exercise, it will tell me how much I need to, it'll tell me how much my net worth or my investments need to grow to generate whatever dollar amount I want per month. So let's use my illustration, which is 10,000. My illustration is 10,000. I take $10,000 a month and I times it by 200. That's $2 million. Hypothetically, that's $2 million. So if I want $10,000 a month in income, guys, I need to bust my butt over the next 10 years, 15 years, 20 years, whatever it is. I need to bust my butt, earn money. Don't spend that money on silly stuff, but take that money that I earned and I got to put it into these assets we're going to talk about today. And I got to do that every single month, every single year for as long as it takes till I can get to that $2 million. Once I get to the 2 million, then I take the 2 million and then I go take the 2 million and find something that'll give me a 6% rate of return, which there are plenty of things out there and we'll talk about that. So I take the 2 million, I go find me something that'll give me a 6% rate of return that generates $120,000 a year. I divide that by 12, there's my 10,000. So here's the thing. Now I'm ready to go because I've been really specific of what I'm trying to get accomplished. Okay, Richard, when do you want to accomplish this? I want to accomplish it in the next 10 years. So that's my target date. So I'm 56 today. I want to accomplish it by 66. So I got a 10-year window. That's very important that we identify how long we want to be in this thing. I don't know when, I don't know how long I want to be in. No, you got to identify that. Stop taking the easy way out. I want to be in this thing for 10 years. Richard Fain wants to be in this thing for 10 years. That's my target date. What's my target amount I need to be getting from my investments in that 10 years? At the end of those 10 years, how much do I need monthly to live on? Okay, I want 10,000. So my target date is 10 years. My target amount is 10,000. And then my target net worth is 2 million. Those are the three things we got to know, guys. You got to know your target date, your target amount, and your target net worth. Those three things there are going to help you put your plan together. Now that I know those three things, I can then go back and look at my income and I can say to myself, okay, in order for Richard Fain to get the 2 million over the next 10 years, what do I need to be investing each month? Let's talk about that. For Richard Fain to get to $2 million net worth over the next 10 years, how much money every single month do I need to be investing in something that'll give me an 8% rate of return in order to get to my 2 million? How do you do that? Well, you go to what we call a future value calculator. They're readily available on the internet for free. You can use the one I use. Go to www.calculator.net and you can use the one that I use. It's free, right? So I go to calculator.net and I say to myself, okay, I got 10 years. That's my target date. I got 10 years. I'm 56 now. When I'm 66, I'm done. I need to be getting $10,000 a month when I'm 66 from these investments. Now, I'm willing to pay the price for these 10 years. I'm going to pay the price. I'm going to work my tail off. I'm going to delay gratification. I'm not going to buy silly stuff. I'm going to stay out of consumer debt. I'm going to live on less than what I make. I'm going to discipline myself. I'm going to be consistent. I'm going to be paid. I'm going to do all of that stuff that this guy Richard Fain talks about. I'm going to do all of it for 10 years. But I got to know at the end of that 10 years, I got to have this money coming in. So, okay, well, you got 10 years. You're going to get an 8% rate of return. Well, God, how can you guarantee me an 8% return? I can't guarantee you anything. I can't guarantee myself 8%. But what I can do is go look at something that has a history of delivering 8%. See, this is what I'm trying to tell you guys. You got to go find things that have a history of delivering an 8%. S&P 500 index has a history of developing. A history, right? So I look at an 8% rate of return, and let's go ahead and let's talk about what I need to invest every single month in order to get there, right? What do I need to invest every single month in order in the next 10 years to grow my net worth to $2 million in the next 10 years? This is Richard Fain. See, I'm willing to pay the price. No number is going to be too big for me. I don't care if I'm going to walk you through this. Okay, how much money? Let's see. Let's see how much money does Richard Fain need to put in every single year to get to the 2 million. Let's see. How much do I need to put in? Now, guys, I'm an aggressive guy. Some of y'all may not be as aggressive. I'm very aggressive, right? I'm very aggressive. I know exactly what I need to get done, and I'm not afraid to go out and work and get it done. I'm not afraid. So here's the thing. For Richard Fain over the next 10 years, and this is just Richard Fain, you plug in the numbers for you and what you're trying to get accomplished. But here's Richard Fain's plan. Over the next 10 years, from 56 to 66, next 10 years, I'm going to do everything in my power to earn as much money as I can. I'm going to keep every single penny I can keep. I'm not going to spend it on anything stupid. I'm not going to spend it on anything that don't put money in my pocket. No luxury watches, no Gucci handbags, no fancy world trips, no fancy none of that. Nothing. If it ain't putting money in my pocket, I ain't spending no money on it. I'm going to do that for 10 years. I'm going to delay gratification for 10 years. Now, I have to put in $150,000 a year. Now, to some of y'all going to say that's unattainable. See, I'm not that kind of guy. See, I can't is not in my vocabulary. Those are not words I use. See, I use I can. Okay, $150,000 a year, gotcha. How much is that? Let me do the math on that and see how much monthly I need to break that down to. So 150 is my number. Okay, divided by 12. Okay, I gotta invest $12,500 a month every single month for the next 10 years, and I'm gonna have $2 million in my pot of gold at the end of the rainbow. Bingo. That's all I needed to know. So now I got all the information I need in order to build my wealth, right? I got a target date, which is 10 years. I got a target amount that I want coming in passive, which is 10 grand a month. I don't want to have to do anything for that 10 grand a month, not lift one finger, right? I don't want to lift one finger. That's called passive income, guys. I don't want no active income in 10 years. I want all of my income passive where I don't have to lift a finger. My assets do all the work. So I got my target date, 10 years. I got my target amount, $10,000 a month. I got my target net worth because I used the rule of 200, $2 million. And then the last piece of that is how much money do I need to invest on a monthly basis at an 8% return over the next 10 years to get to the 2 million, and that's $12,500 a month. And I'm gonna have almost $2.2 million in my pot of gold at the end of the rainbow. That's the exercise you gotta take yourself through. Okay, Richard, well, golly, 12,500, that's a lot of money. How do you do that? Well, guys, listen to me. There are a million ways out there to make 12,500 a month. You just gotta find your niche. See, I found mine. I found my niche. It's information. I can take knowledge of whatever my skill set is, and I can teach other people that skill set. I can start a business that I can solve a problem for people, right? I can create a solution that solves problems. Make 12.5 easy. Guys, don't limit yourself. Don't defeat yourself. $12,500 is not a lot of money when it comes down to your skill set and what you're able to do. You're able to do way more than that if you would just let yourself. Get out of your own way. A lot of us just limit. We have limiting beliefs. We have limiting beliefs that we've carried with us for years. We doubt ourselves. We use I can't a lot. We allow fear to come in and steal our financial freedom. I'm not going to allow those things to happen in my life. See, I control that. There's a lot of things in this world I can't control, but those things I can control. See, I can control what I believe in myself. I control that. But here's what you got to understand. When you figure out and identify what the amount of money you need to put in every month in something like an S&P 500 ETF, once you figure that out, now you got to go out and earn the money. Now you got to go out and earn the money. You got to find what you're good at, and you got to turn that into an income stream. All of us are good at something, guys. Now, maybe what you're doing right now in your business, maybe what you're doing as an employee is your highest skill set. Maybe that's where you're going to make the most of your money. That's okay. But then you got to add some secondary sources of income. So if someone says, hey, I'm a school teacher, I love being a school teacher, I'm always going to be a school teacher, that's okay, right? Do that. That's your primary income. You love it. It's a passion of yours. Do it. But then you got to go and create some other forms of income below that maybe you can get yourself up to the number you need to have in order to invest every single month for the next 10 years to get to your net worth. Because your net worth is what creates the income. The net worth creates the income, guys. So that's my plan. My plan is to take a certain amount of money, 12,000, whatever it is. That number doesn't faze me because I know I'm capable of it. People make that every day. People make that daily that are no smarter than me. They just decided to go make it. Why can't I? Right? Why can't I go make it just like they made it? Well, I can. I just got to make my mind up to it and go do it. I'm scrolling through Instagram and I see these people on Instagram that are doing all kind of just unique and unusual things to make money right there on Instagram. You got people that go out, they buy old beat up pieces of furniture, they take them back home, they refinish them, and they sell them for a bunch of money. People are giving away this stuff to them. See, so let's not make excuses why we can't do something. That's all it is an excuse. There's no reason in the United States, the greatest country in the world, where you can't go out and create whatever the kind of amount of money you want to create. But we got these limiting beliefs and we doubt ourselves and I can't do this. Oh, I can't do that. Yeah, you can. Yeah, you can. Yeah, you can. Listen, we all got a story. We all got a story, right? Everybody got some challenging story in their past, or maybe that they're currently living in. We all got that, guys. But that's no excuse. We persevere anyways. right? Do I want to continue to live in this lifestyle I'm living in, or do I want to get to freedom? That's your choice. Keep living where you're living and just live there for the rest of your life, or you get to freedom. That's your choice. There is no other choice. That's up to you. There is no other choice. Now, Monday, the 22nd, starts off an opportunity for you to do that. I'm telling you right now, the stock market looks like it's in a period of correction, not a crash, but a period of correction. But that's an opportunity. That's an opportunity for us. We got to look at that as an opportunity for us. For me personally, I look at it as an opportunity, and when the market opens on Monday, I'm buying. I told everybody that yesterday in yesterday's live stream. When the market opens on Monday, I'm in. I'm buying. Nvidia, Tesla, I'm buying. I've already told you guys from yesterday, if certain ETFs get down to my target buy price, I'm buying them too. That doesn't mean I won't continue to dollar cost average in. I will. This, what I'm talking about, I'll be buying the dip. So if the market continues to correct itself down, I just keep buying down, because I know if I can buy these assets at a discount, guys, which I will be able to tomorrow, and probably over the next 3 months. The only time I see that correction, it goes back the other way, is when the Fed decides they're going to reduce interest rates, which they haven't yet. They keep saying they are, but they keep pushing it out further and further. Now, all of a sudden, it's December. It went from June, July to December now. So what that means is there's a lot of opportunity in the market to buy up great companies at a discount. I just told you Nvidia is trading almost $200 a share lower than it did last month. And there is no material difference in the company. It's still the same company. What a great opportunity for someone who's not afraid, for someone who's positioned to pick up, in my opinion, almost $200 per share discount on one of the great companies in the world. You're talking about the third most valuable company in the world, guys. A company that not doubled, but 12x'd its revenue in 8 years. And is projected to 12x it again over the next 8 years. This is how we build wealth, guys, but we got to be positioned. We got to be positioned. We got to have a brokerage account. We got to have money to invest. If you don't have those two things, then you're not positioned. You're not going to take advantage of this great wealth transfer. You're not. And I hate for someone to look back 10 years from now and say, you know something, I listened to this guy on YouTube and I didn't do anything. I regret that, because I'm still in the same position that I'm in, that I was 10 years ago. I'm in that same position now, but I'm 10 years older. So I'm 40 years old today. I do nothing. You're going to go to bed one night. You're going to wake up the next morning. You're going to be 50. And you're going to look at your financial situation. It's going to be worse. From 40 to 50, you did nothing but listen, but no execution. Guys, there's no reason for that when you don't have to. There's no reason not to execute. You got to execute. You got to execute, guys. So here's the thing. Here's where we're at. Monday morning, when the market opens, here's what I'm going to be doing. I'm going to buy Nvidia. I'm going to buy Tesla. Out of the Magnificent Seven, those are the two I'm going to buy. Out of the Magnificent Seven, right? The other 5 of the 7 Magnificent Seven companies, I'm not going to buy them. I'm not going to buy the dip. I'm still dollar cost averaging in on them, but I'm not going to take money out of my reserves to buy. Those 2 that I mentioned, Nvidia and Tesla, in my opinion, have the most upside. You got Tesla trading under $150 a share. You do. It takes me back to 2022 with Tesla when it got itself down to 104 a share, 105 a share in 2022. And then all of a sudden, they made a run. Within a 6-month period, they made a run to 300 a share. I made a lot of good money. Just saying. I'm not saying that'll happen this time. I'm just telling you what the history of Tesla has done. It's been a really swinging from a per share stock price. I'm not telling you to buy Tesla. I'm just telling you what I'm doing, guys, and what I have done in the past. Now, so that's one. I see a lot of upside, at least $100 a share upside with Tesla. That's what I see with Tesla. I don't know if it'll be this year or it'll be next year, but it's $100 a share upside. If I can get Tesla under 150, I think at some point it goes back to 250. Easy. All it needs is 1 or 2 quarters of beating expectations on its earnings. That's all it needs. And it's that quick back to 100 a share higher. And then I make good money on that. So that's one. The other one is going to be NVIDIA. Right now, they're already a $200 discount from March 25th of this year. March 25th, 2024, it traded at $950 a share. That's what it closed at. And that same day, it got itself up to $974, but it closed at $950. So I see a $200 bogey right there that I can go just scoop up. I can just scoop that up. Put me some money in and just scoop it up and just wait. Again, earnings, I believe first quarter earnings or fiscal year first quarter earnings for NVIDIA come out in May. If they hit it out of the park in May, I don't care what the market's doing, they'll probably move up in per share stock price. If they're neutral, they don't hit it out of the park, or neutral, it may even dip a little bit further. I don't know. I don't have a crystal ball, but I just know, I believe before the end of this year, they can be $1,000 per share. So I see personally at least $200 worth of upside there that I can buy at a discount starting Monday. So those two I'm on. The other things that I'm looking out for from an opportunity standpoint are some ETFs. One of them is going to be Vanguard Information Technology, VGT. Last time I looked at it, it was trading at about $479. If that thing, through this period of correction, if it goes down to anywhere in the 350 to 375 range, I'm all in on VGT. Currently, right now, I'm not buying VGT. I'm buying FTEC right now. But one of the great ETFs is Vanguard Information Technology, VGT. They got about $5 billion under management. Yeah, I think it's 50 billion. 5 or 50. I can't keep all these numbers straight in my head, guys. But they got a lot under management. So right now they're at 479. If they can get themselves down through this period of correction, I don't know how deep this period of correction will be, but if they get themselves down to anywhere between 350, 379, 350, 375, I'm in. Same thing with Vanguard, S&P 500 VOO. If VOO, which I believe on Friday when I looked at it, I believe it was, let's see what VOO closed at on Friday, because I want to give you guys an idea of exactly what I'm going to be looking out for in this period, this correction period in the stock market. Let me see what VOO closed at on Friday. Let's see here. Okay, it closed at 455. So VOO closed at 455, same thing. If it gets itself down anywhere in that 325 to 350 range, then I'll buy that in this period of correction, this correction period. So that's what I'm looking for. I still dollar cost average in every month. That's not going to change. I'm going to continue to do that. I'm going to continue to dollar cost average in. That won't change. Again, guys, I've been through this. People can say whatever they want to say. I done been around a long time. I've been buying VGG. I've been buying VGT and VOO for a long time. I've been in the stock market for a long time. People come in here and say things in the comments that they've been in the stock market 2 days, 1 month, a year. Listen, man, trust me on this. If we're getting ready to have a correction period, which we could be, right? Because we already know the stock market shouldn't have been performing as well as it's been performing when interest rates are this high. But the reason it's performed well is because of FOMO, right? Anticipation that the Fed would be reducing rates, interest rates. So it performed well because of FOMO. We know it shouldn't have done the things that it's been doing, not with interest rates this high, right? Not with inflation and interest rates that high, but it did because of FOMO. Now the FOMO has worn off because the Fed is pushing back the date that they're going to reduce these rates. So the FOMO has worn off. So now you're starting to see a correction period. You got the S&P 500 that's under 5,000 points for the first time in a while. I think it closed on Friday, I don't know, 4,009 something. So it's under 5,000. And it hasn't been under 5,000 in a minute, right? So my point is there is a period of correction that's happening. That's an opportunity for us to buy the very best companies at a discount if that's what we decide to do, right? I decide to do that. Whether you decide to do it or not, that's up to you. You have to make that decision. I've made the decision that's what I'm going to do. I'm going to go ahead and buy, and I'm going to buy as much as I can buy as I buy the dip down. Now, I don't go in on Monday and take a big old chunk of money and just go dump it in. That's not what I do. Let's take hypothetical. Let's say hypothetically I got $20,000 that I want to invest. That's what I want to invest on Monday. So what I'll do is I won't take the full 20,000 on Monday and just dump it into anything. What I'll do is I'll say, well, okay, I got 20,000 to invest over the next 20 trading days. Over the next 20 trading days, I'll take $1,000 a day over the next 20 trading days, and I'll make an investment. So on Monday starts my first trading day. I take $1,000 and I buy NVIDIA. On Tuesday, I take $1,000, I buy NVIDIA. On Wednesday, and that's what I do to get my 20,000 in. I take 20 days, 20 trading days, and I buy in when it's appropriate, right? So if it starts out at 762 on Monday morning, but it slides down to 749 on Tuesday, then I just put another $1,000 in at 749. If it bounces back up on Wednesday to 775, personally, I go ahead and buy again. Because remember, I got a $200 a share opportunity there. That's the way I look at it. Not scientific. I'm not a financial advisor. I'm not an expert in the stock market. I'm not any of that. I'm just telling you my way I invest. It may not work for you, but this is how I invest. This is how I look at it. I look at it as, hey, it got to 975 a month ago. I believe it'll get back there. Now, unless something material has changed in the company, why wouldn't it go back at some point? It would. That's the way I look at it. Doesn't mean that'll happen, but that's how I look at it. So then I just keep buying every day. I just keep buying in. Maybe on Thursday, it drops back down to say 749. Boom, another $1,000 in. My point is over that 20 days, 20 trading days, I believe my average cost over that 20 trading days is less than if I just went boom at one point with the 20,000. I think I just spread my risk over 20 trading days. And that's the way I do it, right? That's the way I do it. Because see, I believe no matter where I buy at, I'm gonna make money because I think it gets to $1,000 a share. I think it gets to $1,000 a share by the end of the year. All right, guys, we got our first super chat. Let's see what we got here. It's coming in from Maurice. Maurice, thank you, man. Appreciate the super chat. Appreciate you rocking with me. You understand the value here, so I appreciate you, man. Thank you. Richard, what do you think about mid-cap growth ETFs and small-cap growth ETFs, and what are your favorites? Now, you know something, guys, mid-cap, small cap, let me just kind of give the folks that are in here, Maurice, my little layman's version or layman's definition or explanation of what that is. So in the stock market, guys, publicly traded companies, that means companies that you and I can buy shares of. We can buy stock in those companies. They're publicly traded companies. They're typically on a stock exchange like the New York Stock Exchange, right? So in those publicly traded companies, you got large publicly traded companies, you got mid-sized publicly traded companies, and you got small publicly traded companies. They're all public companies. Some are just larger than others. And then you have, large growth, mid growth, small growth, and they're just small cap, mid cap, large cap. That means large companies, mid-sized companies, small companies, right? And there's somewhere for everybody to invest. Personally, I'm just going to give you my personal opinion, Maurice. I only invest in large cap, right? Now, if there's an ETF out there that decides to dip down, but I don't really invest in like the Russell 2000. I don't really invest in like the small cap 600. I think that's what it's called. Not that anything's wrong with that, Maurice. If that's your thing, go ahead. I don't invest in any of those. I only want big boy blue chip, period. But that's my personal choice. Not that you can't go and find a good mid-cap ETF or a small cap ETF. I'm sure they're out there and I'm sure they do okay. But personally, my focus and my time is spent on the fastest growing big boy blue chip companies out there. That's where I hang my hat and that's where I spend my time. Like I said, the Russell 2000, the small cap 600, and many more like that. Here's my recommendation for anybody that wants to do any more research on that, including you, Maurice. I say go out to the $1 trillion research lab and just type in, give me the top 10 mid-cap ETFs. That's all you got to do. Put that into Google. The top 10 mid-cap ETFs. The top 10 small-cap ETFs. Boom. Now, I'll tell you where my preference would be. I'd go to Vanguard. Vanguard got wonderful mid-cap and small-cap ETFs over there. Go check that out. Hey, go check out Charles Schwab. Go check out Fidelity. Go check out State Street. Go check out BlackRock. There's plenty of places you can go to find these things. Here's the key, though. Wherever you go, you still have to compare them. And like I told you guys, the three things you want to look for when you're comparing them, you want to look at performance, right? How well have they performed against the index? How well have they performed against the sector? That's what you want to look at. Performance, right? I want to look at how well have they performed, because that's going to tell you what type of ROI you can expect in the future, right? Second thing I want to look at is expense ratio. How much are these people going to charge me to manage my money in this fund? I need to know that, because they're not going to all be the same. So you got to go look at the expense ratio. Then the third thing I think you got to look at is history. How long have they been around? Those are the three most important things to me. Is I want to look at their performance compared to the index they're tracking or the sector that they're tracking. I want to look at their expense ratio. How much you're going to charge me to put my money in this fund and manage it for me? Although it could be passively managed, there's still going to be a fee. Like for instance, if you go buy Vanguard, Information Technology VGT, they're going to charge you 0.10%. right? For every $10,000 you put in there. If you go with Vanguard Information Technology, Vanguard S&P 500 VOO, they're going to charge you 0.03%. So for every $10,000 you put in, they charge you $3 a year to manage it. That's an expense ratio. The higher the expense ratio, the more they're taking from you when it comes to your return on investment, because that's where they get their fee from. So all I'm telling you, no matter where you go, Maurice, I nothing wrong with mid cap, small cap ETFs. Nothing wrong with that. It's just not my preference. I don't spend a lot of time researching them. I don't spend for what? I'd rather go invest in the Magnificent Seven, man. I'm just sorry. That's me. I'd rather just go invest in SPLG. I'd rather just invest in FTEC, VGT, VOO. I just don't have no, you know what I'm saying? It ain't my thing. So I can't really tell you what's my favorite because I don't invest in any of them. So y'all know on this channel, I can only give you what I invest in and my rationale, why I invest in that. But other than that, I say there's some wonderful ones out there. Like I said, Russell 2000, small cap 600, they're out there. Go do you some research, get you 3 of them that you like and compare them. Right? Just compare them. And those 3 things is what I would start with that I gave you. And then you just make your decision from there, right? So hopefully that answered your question, Maurice. I appreciate the super chat. And that was a great question. That was a great question, right? Again, my investment philosophy, guys, is just simple. Just keep it simple. And the way I keep it simple is I focus on what I believe will give me the biggest bang for my buck over the next 10 years. Again, like I said, that's what I do. Nothing wrong with mid cap, small cap, nothing. If that's your thing, go get it. They're out there. And there's some good ones out there. I just don't want to waste my time with that. I just want to go to the video. I just want to, you know what I'm saying? I want the biggest and best companies in the world, the fastest growing companies in the world. And a lot of small cap and mid caps are growing fast. But I just hang my hat on what I like to hang my hat on. That's all I can tell you. So hopefully that like I said, that answered your question. And again, I appreciate the super chat. It was a great one, and thank you. So here's the concept, guys. We got Monday coming around. That's tomorrow. The question you got to start asking yourself is what is your game plan for tomorrow? What's your game plan? What is your game plan for tomorrow? Or do you have one? See, this is what I'm telling you guys. See this concept of, oh yeah, we want to get to financial freedom, but we have no idea. That's hogwash. That's hogwash. See, that's just an excuse. There's no reason why you shouldn't have an idea. If you watch this channel every day, like I recommend you do if you don't know what you're doing, then you should have an idea. I just gave you exactly what you need to do. It's not that hard. Earn, keep what you earn, and invest it for 10 years. See, here's the problem though. We don't want to wait 10 years. That's the real rub, right? Let's be honest. Y'all keep it 100 with me. Come on now, be honest with yourself if you ain't gonna be honest with me. Most of us don't want to wait 10 years. That's the problem. Most of us want that thing to happen tomorrow, in a week, a month, a year. We want to be rich. That's how we're wired. That's how we've been trained, right? Let's be honest. Let's be honest. No one wants to wait 10 years. Nobody does. Do I want to wait 10 years? No. But guess what? I know that's what it's going to take. That's the difference between me and a lot of people. Do I want to wait 10 years? No. But I know that's what it's going to take because I've been down this path. I've done it before. I know exactly what it takes. Most people have no idea what it takes, but what they hear on TV or what they hear on social media. They have no idea. What I'm telling you guys is going to take a minute for most of us. Now, if somebody comes in here and says, hey, Richard, I already got $500,000 to invest and I'm going to get there in 2 years. Yeah, that's easy for you to do because you got $500,000 to start with. Most people don't. That's the rub, right? If I got $500,000 to start with, yeah, why would it take me 10 years? It probably won't. But I already got $500,000 that I'm starting with. But if I'm starting with $500 It's not going to get done in 1 year. Just telling you the truth. It's not. So you have to decide if you're willing to pay the price for these next 10 years or not. If you're not willing to pay the price, that's okay. You'll just stay where you're at. You'll stay on the hamster wheel. You'll stay in the rat race. And if that's where you okay with that, then fine, guys. Everybody has their path. See, my path was I wasn't going to be on that hamster wheel for the rest of my life. So I gave up something. I gave up something in order to get something. See, you got to give up something to get something. Nothing's free in this world, guys. For some reason, we think it should be free, though. A lot of us think it should be free. A lot of us think it should be free. No, guys, no. You got to understand the society we live in. When you add value to the marketplace, you expect to get paid. And nothing wrong with that. I don't know where some people get off thinking it's someone's responsibility to give them something for free. Oh, if you're already rich, why do you got to charge? What the hell are you talking about? Let me ask you a question. Haven't you seen your favorite athlete, your favorite movie star, your favorite entertainer, your favorite politician, your favorite motivational speaker, your favorite daytime TV host? Don't they all get paid? Ain't they all rich? Then why are they getting paid still? See what I'm saying? But only when it comes to YouTube or something like this, y'all think nobody don't supposed to get paid. No, you do get paid. It's your time. It's your skill set. I don't care if I had $1 billion. I'm going to get paid. Ain't nothing wrong with that. See, that's what you should be thinking. Why are you out here? Listen, man, on YouTube, it's free, but I still get paid. I don't get paid directly from you, but I get paid. I get paid, and I get paid a lot. I mean, it's like there's something, like I got to hide behind that because I get paid. No, I get paid because I add value to the marketplace. That's why I get paid. See, I add value. And when you add value to something, you should get paid. I don't know. You should. Now, are there times where you do things pro bono? You'll do something for free? Sure, but that's when you choose to. I'm not going to do something for free because you tell me to do it for free. I'm going to do it for free because that's what my heart says to do. And I do that often. But I'm not going to apologize because I got a skill set and I know how to make money and I'm supposed to give it for free because someone says, oh, you're already a millionaire. Why do you got to charge this and that for your membership club? Listen, man, I bring a skill set, I'm going to get paid, period. If you don't like it, don't join. Case closed, solved. Tomorrow, let's get ready, guys. Let me ask you again. Do you have a plan for tomorrow and the rest of this year when it comes to paper assets? Do you have a plan, and what is your plan? Please tell me your plan. This is your opportunity right now to tell me what your plan is. See, Maurice understands the value proposition here. Some of y'all don't quite get the value proposition. But until you change the way you think, guys, let me tell you something, man. It's going to be a hard road for you when it comes to these assets. I guarantee you, man, you're not going to go anywhere on YouTube. You're not going to go anywhere on TikTok. You're not going to go anywhere on Instagram. You're not going to go anywhere on Facebook and find somebody that is where you are, that is where you want to be, that ain't getting paid. They are. Face it, they are. If I wanted to go sit down with somebody that I looked up to, they're where I want to be. If I said, hey, Prime, listen here, Coach Prime, I want you to come down here and do X, Y, Z. Do you think I'm going to ask him to come down here for free? Do you think he's going to come down here for free? No. I wouldn't ask him to come down here for free. I would pan. What is going on here? I just don't quite get it. But see, that's our problem. That's our problem. We think somebody owe us something because they watch us on YouTube. No, they don't owe you anything. You owe yourself something. You owe yourself to discipline yourself, be consistent, be patient, and build wealth. That's what you owe yourself. Nobody else owes you anything. Learn that. You'll get yourself one step closer, right? But you got to be prepared for tomorrow. When the market opens, let's see what happens. I'm going to be prepared. I'm going to be ready to buy, period. Be prepared and I'm going to be ready to buy. And I told you what I'm buying. NVIDIA, Tesla, those are the two I'm buying, period. As soon as the market opens in the morning, that's what I'm buying. I'm not buying more of SPLG. I'm not buying more of FTEC because I already dollar cost averages those every month. So I'm not buying more of those. They're not at a deep enough discount for me to take the jump that I need to take. They're not at a deep enough discount. But boy, that NVIDIA and Tesla, those are at deep enough discounts. I'm all over them in the morning. What's your game plan? And I've already told you how I'm going to buy them. What's your game plan? What are you going to do tomorrow morning when the market opens? What are you buying? Or are you just going to sit around and make excuses? All right, we got another super chat coming in from Mopar. Mopar, appreciate you, man. You always rocking with your boy. I appreciate you rocking with me. You understand the concept here. You understand nothing's free in this life. For some reason, everybody else do think it's free. But you understand that. I appreciate you. And of course, Maurice, you know how I feel about you, man. I appreciate you as well. You guys always rocking with me. I invested in SMCI because it went down in unison with NVIDIA. I had an opportunity to sell at a loss that would equal the upside of NVIDIA. If you faced with arbitrage situation to switch to a better horse, would you or stay? Here's the thing, man. That's a great question too, Mopar. You guys are knocking it out of the park today. Great question. Here's what you got to think about. You got to say to yourself, okay, SMCI, what's the history? What has it done? And what does it have the potential to do? And can I wait? Right? Sometimes we got to wait. We got to hold it if we believe in it, right? See, for me, I believe NVIDIA will get to $1,000 a share this year. And if it don't this year, it will next year. See, I know that. I believe that. Do I got any crystal ball that says that'll happen? No, but that's what I believe. So guess what I do? I buy it, and if it keeps falling, I keep buying. And I just hold it. That's the decision you got to make. Now, I'm not saying the switch out ain't a bad idea, but you got to figure out, number one, what are you really trying to accomplish here? Or you're just in this thing to make a quick turn or a quick flip. Am I in this thing to make a quick flip? Or am I in this thing because I have a target buy price and I got a target sell price? You got to determine what you're trying to get accomplished. See, me, when I'm in NVIDIA, I have that. I have a target buy price, which is at right now. Because I've always said around 750, I'm in like Flynn. If it gets in that 750 range, because the last time it slid down to $650 something a share, I was a moron and didn't buy it. And guess what it did? Went up to $975. I'd have made almost $300 a share. All right, guys, I'm almost losing my battery here. I don't know what's going on here. Hold on, let me check on this battery here. I don't know why the battery is acting crazy. All right, because I can't lose the battery here. I don't know why the battery is acting crazy. All right, I think we're good. Let me get my other cord here, just in case. Give me 1 second, guys. Let me get my other cord just in case this thing acts crazy here. I think I'm good here. Hopefully I ain't losing no battery on this thing. Oh, gee, let me see here. Hopefully this thing ain't losing battery here. I don't think so. Maybe it just needed a little. All right. So my thing here is this. Matter of fact, I know what I'm gonna do. Y'all give me a second real quick. Let me just move my camera around here. And I'm gonna put my other cord in. Make sure I don't lose this thing. Because I don't know what's going on here. Give me a second, guys. Bear with me. Bear with me. There we go. Now I know that was good. All right. So here's the thing right here, Mopar. You got to make sure you understand what you're trying to get accomplished, right? If you like SMCI, stay in it. Don't abandon it. Stay in it. Stay in it. If it demonstrated that it has the propensity to get to a certain level from a per share stock price, at least what I seen a couple of weeks ago, it was a monster. Don't abandon it, right? Unless you believe you can right size yourself and get where you want to get in the video, then do it. But you got to kind of figure that out. You got to kind of walk through that, right? You got to kind of walk through that. So hopefully that answered your question. Me in the video, I'm in this thing until it gets to $1,000 a share. That's my target sell price. My target buy price is $750, $760, $775. Again, like I told you, I missed that $600 and something a share. And then all of a sudden it came out with its fourth quarter earnings and went to the moon. I missed it. I ain't gonna miss it this time. I'm not. So I tell you that story to just say, figure out what you're trying to accomplish and figure out if staying in that one is gonna make it happen. If it's not gonna make it happen, then yeah, you may need to think about NVIDIA. I don't think that's a bad opportunity, but you just gotta know what you're trying to get accomplished. So hopefully that answered your question, man. I think both of them are great. I think for me though, if I had to pick between the two, honestly, I'm just giving you my opinion. You got to figure this out for yourself. But if I had to pick between the two, I pick NVIDIA. If I got to pick between the two, I think NVIDIA's upside, where it's positioned, is just so much tremendous upside. In my opinion, I just, if I had to pick between the two, it would definitely be, I definitely have to go with NVIDIA, in my opinion. But maybe you take both. I don't know. I don't know where you're sitting financially, but decide what you're trying to get accomplished with it, is what I'm saying. So NVIDIA, Tesla are my two tomorrow. What else are you guys buying? Anybody else buying anything? Anybody geared up, ready to buy tomorrow to take advantage of this correction? Will the correction get deeper? It could. It could. It could. It depends on what institutional investors, these big hedge funds, these Wall Street firms do. It depends on what they do, because they make up 75% of the trading in the stock market, right? It depends on what they do, right? It depends on what they do. So we'll have to watch it. Of course, you know, guys, I'll be on here every day watching it, because that's what I do. And I'll be giving you my 2 cents on what I think is appropriate for me. And then you guys, if you want to copy my plan, you're more than welcome to. But please understand, you got to be in this thing for a while. You got to be able to say, well, okay, if I buy NVIDIA at 762 and it drops to 650, am I okay with that? See, I'm okay with that, because I know at some point, I believe it gets to 1,000. So if it drops to 650, I buy more. What I don't want to do is try to time the market and I mess around and say, well, you know, I'm not going to buy at 762. I'm going to wait till it get down to 600. And then before you know it, it goes from 762 to 862, I just lost $100 a share because I'm getting greedy and trying to time them. Monday, I'm in there. If it go lower, I buy more. But I'm in Monday. If it go lower, I just buy more. I got a decision to make if I want to buy more. But I don't want to wait to think, okay, it's going to go down to 600 a share, and it never goes. And then all of a sudden, I just missed all this opportunity because I'm fooling around. So that I'm not willing to do. So Monday, for me, I'm all in. And then, like I said, I'm going to continue to watch these other players. Now, I'll continue to watch Microsoft. I'll watch Meta, because I think Meta is one also that has some pretty big swings. Remember, in 22, Meta got under $100 a share, guys. At one point in 2022, Meta was under $100 a share. And we know what it is today, close to $500 a share. So Meta is another one to watch, but it ain't deep enough right now for me. It is not a deep enough discount. Same thing with Microsoft. It's not a deep enough discount for me yet. You know, will it get there? Potentially. It's just not there yet, right? So I'll watch Meta. I'll watch Microsoft. I'm not going to buy the dip on Amazon. I'm not going to buy the dip on Apple. I'm not going to buy the dip on Alphabet. Those three I'm not. But the two I'm definitely buying tomorrow is NVIDIA and Tesla. And then the two on the watch list will be Microsoft and Meta. And that's the Magnificent Seven. And that's all I'm buying in individual stocks. Just the Magnificent Seven. Ain't buying nothing else. Nothing else but the Magnificent Seven. Everything else I dollar cost average into. The only way I get back into the ETF game buying the dip is if VGT and VOO go on sale. Right now, they're not on sale. They take a little bit of dip, but they're not on sale yet. And to me, they're not on sale till they get in the 300s. That's when they start being on sale to me for VGT and VOO. Once they get in the 300s, then they're on sale. I start to seriously thinking about setting some money aside and going back into those two if they get into the 300s. They don't get into the 300s, I don't fool with them. We got a super chat from Ty here. Ty here, thank you for rocking with me, man. I appreciate you. Appreciate you. I guess I could move my laptop over here so that I'm not kind of looking away from the screen. So why don't I do that? Let me move over here. That way I'm not looking away from the screen. Okay, let's see. Ty here's question is, what price would you like Apple at? Lawsuit and earnings. What price would I like Apple at? So for me, guys, Apple would need to be probably in the low 100s. Something like 125. Somewhere in that ballpark. Maybe even a little, somewhere like that. Because guys, you got to understand, it's not a lot of upside. Even at 160, it's not a lot of upside, because when you look at Apple over the last year and a half, how high has Apple went? Even when it was, I don't even think it went over 200 a share last year or this year. Now I could be wrong. You guys correct me, but I don't think Apple went over. I don't think it went over $200 a share. So for me to buy the dip, I got to have more upside than that. Right? I got to have at least $50 a share upside. And right now, I don't think I can. It's just not, the discount ain't deep enough for me yet, Ty here. That doesn't mean you can't buy it. I'm just telling you from my perspective, the upside got to be more than what it is right now. It got to be more than that. I got at least, for Apple, I got to at least have, I got to have Apple at least 125, 130, so that I can get it back to 180 and make $50 a share, right? So it got to be in that 120 to 130 range, so it can go back to 180 at some point in the future, and I can make $50 a share. Right now, I don't see that. I don't see it going that low. What did it close at on Friday? I haven't really looked at Apple like that, but let me see. What did Apple close at on Friday? See, it closed at 165. Looks like it closed at 165 doing trading hours. So at 165, that's just not enough. It's just not deep enough for me yet. It's just not deep enough. It got to get a little bit deeper. I need it down in the 130 range. Because then if I can get it at 130, you know, it'll go back to 180 quick. And now I made $50 a share. So that's how I look at it. But you know, again, hopefully you just got to figure out, again, you got to figure out what are you trying to get accomplished. Just like I said to Mopar, you got to figure out what you're trying to get accomplished and what's the safest way to accomplish it. For me, I look at target buy price and target sell price. And I say to myself, for each one of the stocks, what's my upside I'm looking for? For Apple, it's $50 a share, right? For NVIDIA, it's at least $100 a share. For Tesla, at least $100 a share. I need at least that for me to put my money in there and wait. I'd rather just keep it over there in the money market and let it get 5.25, right? And then just stay in my normal dollar cost averaging every month. But if I'm gonna take money out of reserves where I'm getting 5.25 and I'm gonna put it in something, I got to get the payoff. Or I just keep dollar cost averaging in for the 10-year deal, right? All right, we got another super chat from Austin. Appreciate the super chat, Austin. What's your thoughts on Tesla? Well, I like Tesla. I think right now what's happening with Tesla is just like what happens with a lot of companies that are growing fast. You have to get the right level of production. You got to have these cars at the right price. And I think right now what is happening is, since Tesla and most electric cars are still looked at as a luxury in a lot of people's minds, right? Because they typically cost more than just a basic Chevy. You go get a Chevy Malibu, or you go get a little Toyota, one of them little Toyotas, or you go get a little Kia. That's still considered sort of a luxury. So when the economy is, even though the economy is good, you got to understand the economy is good for the 1%. Most of us are down here in this bad economy where we can't afford a Tesla. Let's be honest. Most of us are down here in this bad economy where we really can't afford a Tesla. So Elon has to reduce it, and over in China, where they produce a lot over there and sell a lot over there in China, they got a lot of competition over there. And that competition is kind of nibbling. So he has to decrease his prices in China so he can move units, right? He has to right size prices in the United States so he can sell units. He has to cut some of his global employee base so that he is not, got all these excess people that he don't need. He's still the #1 EV company in the world, still got the #1 charging network in the world. So I think at some point they bounce back. And I think at 150 or less, I think I'm in good position if I'm willing to wait. And I may have to be willing to wait for a couple of years, but I'm okay with that. I think I get an upside. I think if I can get him at 150, I think they go to 250 at some point in the future. And now I made $100 a share. That's how I look at it. So hopefully that answers your question. Again, I'm no Tesla expert, but I just know, in my opinion, if I'm thinking about buying a car and I'm on a budget, Tesla ain't in that plan. That's just my opinion. If I'm on a budget, I'm trying to go find something budget friendly. And Tesla's just not cheap enough. Even the base Model 3 ain't cheap enough where I can splurge on a Tesla. I just gotta go get something else, right? That's cheap enough. So that's sort of where I look at it. What price will they fall down to? Who knows? Everybody gonna have their own little opinion, but who knows? Again, my target price is 150. I don't care what your target price is. Your target price be whatever it want to be. I'm telling you what I'm doing. Whatever your target price is, that's what you stick to. My target price is under 150, I'm in. And then I just keep buying the dip. But the dip starts at 150 down. On NVIDIA, the dip starts Monday at 760 down. That's the dip for me. I just buy the dip down and wait. Could be a month, could be 10 months. I don't care. I just wait because I know the payoff is coming. History tells me it's coming, right? So that's the way I look at it. So you guys got to have a strategy for tomorrow. You got to have a strategy for the rest of the month. You got to have a strategy for the rest of the year. You got to have a strategy for no rate cuts. You got to have a strategy for rate cuts. See, my strategy for rate cuts is just keep it by the dip. If rate cuts come, right? If the rates go down, then I just dollar cost average in. If there are no rate cuts, I buy the dip. That's my strategy. My strategy is if there are no rate cuts and I know rates are going to come down, then I just continue to just dollar cost average in and just ride it on up through dollar cost average. If the Fed come out and say there will be no rate cuts, then that's why I'm buying the dip now. Because right now the market, a lot of the market don't believe that there are going to be rate cuts. You can tell by starting to see the market sell off a little bit. People are starting to say, it ain't coming. Let me get my profits and get out of here. And when I say people, I'm talking about the 75% who are the big investors in the stock market, not most of the 25%ers. The 75%ers are the ones that are starting to move away and take their money and put it in either treasury bonds or they're putting it in the money markets just to be able to wait. They made a lot of money in the first quarter, so they're taking their profits and they're moving over here and waiting, right? So got another super chat. It comes from Marissa. Marissa, thank you. And Marissa, if I'm not correct, you are a membership club member. I'm pretty sure you are because I know I saw one of your emails to me through the membership club this morning. So thank you for that. And for all my other guys who did super chats today, thank you as well again. And hopefully, and I'm not sure, hopefully some of you guys are membership club folks, but I know Marissa is because her name is not just your prototypical name. And I remember getting an email from her. So thank you, Marissa. Let's get to your question here. Hey, Richard, I inherited 3 properties. One is to be sold because of other heirs involved. The other 2 are to be rehabbed for rentals. Should I use one for collateral to secure funds? Yeah, absolutely. Absolutely. Go borrow somebody else's money. And guess what? Once you rehab them and you put good tenants in there, that tenant rental income will pay for that other people's money that you borrowed. Yeah, nothing wrong with that. Nothing wrong with that. Hey, guys, I got no problem with me taking equity out of assets to invest in other assets that put money in my pocket. Here's my problem. I got problem when you take money out of assets and you go buy liabilities that put no money in your pocket. That's a problem. But you taking money out of an asset to invest in another asset that puts money in your pocket, hey man, nothing wrong with that. I did it for 30 years. I never bought a piece of real estate cash, ever. And never, I ain't gonna say never will. When I get to the golden years, I will. But for right now, even the house that I live in right now, the other house, they got mortgages on them. What do I need to spend $1 million and put it in a house for that don't produce no income? In your case, they will be producing income, but I'd still go get somebody else's money. See, you gotta leverage. It's called leverage, guys. You have to leverage your assets to create more assets. I leverage my assets. I leverage my 2 properties. I rehab them. I put tenants in them and I re-leverage them again to buy 2 more. That's what I do. That's what I would do, Marissa. I would not dip into my money or my other, I wouldn't dip into my other investments if I don't have to. I would use those real estate properties since it appears that you got them in an inheritance, so you probably own them free and clear, but they need some rehab. Go get you a rehab loan. Pull enough out to finish both properties. Put your tenants in them. Let them season for 12 months and go back at them again and get you 2 more. That's what I would do. Let them season for another 12 months or 48 months. Go get you another 2. That's what I would do, guys. Every 2 years, I would add a new property. And guess where I got the money from? The existing properties that I already had. I would do a line of credit on every property. So when it was time to buy the new one, I'd go to the other properties, take the equity out of them from the line of credit, and put down the down payment on the new property. That's what I did for 25 years of buying real estate. OPM, right? Because the rental income should pay for the property, right? If the rental income won't pay for the property, then don't buy it, right? You do your rental, you do your cash flow analysis, and the cash flow analysis will tell you what gross rental income you should get, what your expenses are, what your net profit will be. Your net profit, AKA cash on cash return, right? You got to have at least a 10% cash on cash return, in my opinion, for it to make sense. If not, just put the money in the stock market. But in your case, Maritza, you own the properties free and clear. You got them in an inheritance. And then all you got to do is take some equity out in order to rehab them. Now, here's the thing. Just make sure whoever's doing your rehab, they know what they're doing and they're reliable and they have a proven track record of doing this. Don't cut corners and hire people who don't have a proven track record of doing this, because it could turn into a money pit. So please be careful when it comes to who you hire to rehab these properties. Please go to a reputable company that know what they're doing. Don't let some slickster come along. Oh no, I'm gonna save you 25 grand. Let me do it. I'll do it on the side for you. You'll be doing it on the side for the next 50 years. It never gets done. So don't do that. Go to you a good, strong, reputable company who has a reputation and a track record of doing this kind of work. And make sure everything's in a contract. None of this handshake crap. None of this, oh, that's my cousin Pookie. He know a guy over here. No, none of that crap. Go get you somebody that know what they're doing and have everything under a contract. Signed contract. And make sure it is a fixed contract. None of this variable stuff. Oh, if costs go up, it's gonna go. No, it's a fixed contract. This is what you're gonna build. You're gonna rehab it for. If you say $35,000, it's a fixed contract. You sign it, I sign it. I don't care what happens. You fix it for $35,000. Fixed contract. Do not get into any of these cost plus and all this other goofy stuff people do to try to beat you out your money. Don't do it. Hopefully that answered your question, Marissa. Let's keep rolling. But that was a good question, though. I'm glad that was a good question, because we hadn't really had any questions on real estate, mostly on and I know why, because we're talking about the stock market today. But that was a good question. So again, guys, I'm gonna ask you again. Are you ready for tomorrow? Are you ready to buy? Do you have a game plan for tomorrow and the rest of the month and the rest of the year? What is your game plan? What are you trying to accomplish by buying paper assets? If you can't answer that question, you got no business buying paper assets. I'm just going to be honest with you. If you can't answer that question of why am I doing all of this? What am I trying to accomplish? When do I want to accomplish it? What's the point? You're going to frustrate yourself. You got to know that basic information, guys, if you're going to be successful in any asset. If you're going to be successful buying paper assets, if you're going to be successful buying real estate for income, if you're going to be successful in your business, if you're going to start a business, you got to ask yourself them same questions. What am I trying to accomplish? When do I want to accomplish it? And what do I need to gather in order to accomplish it? I say you need a brokerage account if you're going to buy paper assets. Go down to that description box, click on that Moomoo link. They're going to give you 10 fractional shares of the Magnificent 7. Apple, Microsoft, Meta, Amazon, Alphabet, NVIDIA, and Tesla, right? They're going to give you 10 fractional shares of those 7 companies. So if you are interested in an offer, go down to the description box and click on that link, that Moomoo link, and get started today. Send me an email. Let me know you got started. You've put money in the account, and then I'll send you my wealth transfer blueprint where you can basically see exactly what I'm buying. I've already gave you 2 of the 7 Magnificent 7 stocks that I'm buying tomorrow, but I'm buying much more than that. but I'm buying it through dollar cost averaging though, right? I'm not buying the dip on everything, but I'm dollar cost averaging on 3 major investments, which certainly I can give you that blueprint if you'd like to see that video that talks in depth about SPLG. It talks in depth about FTEC, right? So those are the 2 big ones. 80% of my money from a dollar cost average standpoint are going into those two big boy ETFs. And there's a reason for that. And that video will walk you through that. So if you're brand new and you're just starting, you say, Richard, I don't know enough yet to be buying the dip in anything. I just want to get my $100 in, get my $200 in, get my 500, get my feet wet, buy something that's relatively safe, that has a history of being safe, then SPLG is the best spot for you. And I tell people that all the time. My recommendation is a good broad-based stock market ETF, like an S&P 500 ETF, is the best place for beginners and people who are intimidated by this and they need to learn a little more before they can get themselves a little bit more comfortable with it. That's the best place to start, right? I've been doing this for a long time, so I'm able to be okay with buying NVIDIA at the price it's trading at. I'm okay buying Tesla where it's trading at because I've been doing this for a while. For y'all that are just starting out and are not that comfortable, SPLG, which is an S&P 500 ETF that tracks the S&P 500 index, is a wonderful beginner's choice. You got the top 500 companies in America in that fund across every industry, every sector. And the good news is that fund already has the Magnificent Seven in it. It's already there. That's the reason they're called the Magnificent Seven, because they're the top 7 companies in the S&P 500. So for you beginners, that's all you need, in my opinion. Now, again, you go out and do whatever you want because I'm not your financial advisor. I'm not a financial advisor at all. But I'm telling you, if you're a beginner and you're still trying to get your feet wet, that's the only investment you need for right now. And then as you continue to listen, you continue to learn, right? And you continue to want to do a little bit more, then you can start broadening your horizon and start thinking about the Magnificent Seven and some more individual stocks if you want to. But for now, get your 10 fractional shares of the Magnificent Seven for free. Mumu is going to put those in your brokerage account once you open the brokerage account and you've been there for a while, right? You just can't go over there and open the brokerage account and think these folks are just going to put Magnificent Seven in your account day one and then you close the account and then cash out the Magnificent Seven and close your account. They're not going to do that. You got to have the account open. It has to be active for a period of time before they release. Now, they'll put them in there, but they lock them. They lock them until you've been in that account for a while, and then they open them because they're not going to just, these people ain't stupid. They know we'll come in there and open stuff and close it. Get that little money and be there to close the account and dip. Yeah, they ain't trying to hear all that. All right, we got another super chat from Ty here. Appreciate you again, Ty here, for the super chat. ETFs first, this week, or individual stocks? Dang, man, y'all coming on fire today. Good question. Good question. Good question. Here's what I'm going to tell you. Since I believe individual stocks carry a higher level of risk than ETFs, I would say for someone who is concerned about that, if the majority of what you invest are going to be in individual stocks compared to ETFs, I say buy ETFs because I think the bulk of the money you invest should be in ETFs. That's what I believe, because I think we don't want to be the expert. See, ETFs don't require me to be the expert, guys. The ETF itself is the expert because it's tracking an index or it's tracking a sector. It's the expert. The sector is the expert. The index it's tracking is an expert. I don't have to be the expert. They call that a passive investment. When I'm picking individual stocks, I'm the expert. That's an active investment because I'm doing all the work. I'm picking it. I take all the blame. All of it becomes on my shoulders when it comes down to picking winners and losers. If I'm picking individual stock, it's all on me, 100% on me. There is no safety net. So all I'm telling you is the way I invest, 80% of my money goes into ETFs, 20% of my money goes into individual stocks. So that tells you I'm not confident in myself picking 100% individual stock. I'm not, because I'll lose. I'll lose. So all I'm telling you, Ty, here is this. Look at your portfolio. Look at what you're doing. Here's my portfolio. Here's what I'm dollar cost averaging into every month. I got 80% going into ETFs. I got 20% going into stocks. But I also got this $10,000 I got sitting on the sideline that I'd like to get into something. I go take the 10,000 and I may put that in individual stocks as long as my portfolio stays 80% ETFs, 20% stocks. That's the makeup. It has to be 80-20 because we do not want to be on the hook trying to be the expert. Because if something goes wrong with NVIDIA, if something goes wrong with Tesla, if something goes wrong with SMCI and I'm concentrated there, I go to zero. I don't want to go to zero. So I do not want all my money in no individual stocks because if something happened to the tech market, I'm going to zero. But if I'm over here in the S&P 500 and I got 500 companies in every sector, every industry in the tech market goes to zero, I still got 11 other industries that are out there that could be surviving and doing well, and my money in that S&P is safer because of that diversification. But if I'm over here in these 3 or 4 individual stocks and they go to zero, I'm done. Ain't no coming back. So all I'm telling you is look at the portfolio and you better have an 80-20 split. 80% need to be in ETFs like we talk about. 20% need to be in stocks. And if you don't have that, get that. Do not isolate yourself or concentrate yourself or consolidate yourself into the 3 or 4 individual stocks. Please don't. Don't do it. So hopefully that answers your question. So if you got an 80-20 split, but you got a little extra money on the side, then go on into stocks. If you don't have the 80-20 split, no, get your 80-20 split first to protect yourself. Daniel, appreciate the super chat. Thank you very much. Let's see what you got here. Let's see what we got here. Do you think it's necessary to invest in real estate to build wealth, or can I only just invest in paper assets to build wealth? Good question, Daniel. Well, I think again, I think in a perfect world, I would like to have some diversification. In a perfect world, I would like to have a portfolio of real estate, and I'd like to have a portfolio of stocks so that I don't have all my eggs in one basket. That's the perfect world, right? That's a perfect world. If I'm in a world where it's just too expensive for me to buy real estate right now, I just don't have the money. I don't have the down payment money. Interest rates are way too high. Prices are way too high, and it don't make sense. Then guess what I do? I don't buy in real estate. If it don't make sense and I can't make no money right now, I don't buy it. Then I just concentrate on stocks for right now. Now, even though I got all my eggs in one basket, I diversify that basket by doing what? Just like I mentioned earlier to Ty here. I do 80% ETFs, 20% stocks. That's how I diversify myself in one basket. I take 80% of my eggs and I put them in the ETF basket. I take 20% of my eggs and I put them in the stock market, in the individual stocks basket. If I can't buy real estate. That's what I would do, Daniel. And again, ultimately it's your decision, but that's my recommendation. Yes, in the perfect world when interest rates are low, I got the down payment money, I can buy real estate. In the perfect world, yes, I would do both. But right now we're not in a perfect world because for most people, real estate is just, you can't get there because of the interest rates, the down payment. And on top of that, you got also, what do you got? You got an increase in insurance on these properties. You got an increase in property taxes. Everything is increasing. So you really got to be a really good financial steward of your money to be able to afford real estate. Now, there's some people out there that can't afford it because they're good financial stewards and they got enough money. They're buying in the right locations They can make it happen, but the majority of us right now, it's too expensive to buy real estate. So I got to build wealth some way. So I got to stick to either what? Stocks, well, not really stocks, but paper assets. And then I got to stick to building a business. Those are the two of the big three that I concentrate on right now myself personally. I got a business, RF Financial Consulting, and I have a portfolio of paper assets. That's where the bulk of my net worth is right now, because real estate right now is too expensive to buy, even for a guy like me, right? So hopefully that answers your question, Daniel. Doesn't mean down the road, when rates come down and interest rates come down and it's more affordable, doesn't mean at that point you can't diversify. But until that happens, go with what I just recommended to you. A business where you can pour money into that can make more money, or paper assets, or a combination of the two. Let's move on to Mike C. Mike, appreciate the super chat. Let's see what you got here. Richard, 100% agree on your strategy with NVIDIA. I've been buying since last July. Your insight on investing in the wealth building stage is spot on. Thank you, man. I appreciate that, Mike. You know, again, I'm not trying to be an expert here, guys. I'm not trying to tell you I know everything. All I'm trying to tell you guys, I've been doing this for 30 years, right? I've been doing this for 30 years. And I followed this. Listen, I went from zero at 26 years old, zero. I'm talking about zero to where I'm at today. And I did that in what? Two things: stock market, real estate. Because I didn't have a business for 25 years. I worked for somebody. But I took my money, right? I took that money that I earned by working for somebody and I invested it in real estate and the stock market. And then I created side hustles to dump more money into real estate and the stock market. And I just did that for 25 years. And then in 2020, I started the business. So you can do it. You just got to get out your own way. But thank you, Mike. I appreciate it, man. I appreciate the vote of confidence, and I appreciate that you are out here not just sitting around wanting to be entertained, but you're actually out here taking information and converting that information into execution, into action, into building wealth. That's what it's all about. It's not sitting out here just trying to be entertained. No, it's about building wealth, taking this information, what you need, and executing. And looks like you're executing. If you've been buying the video, you're executing. And I think that's what we got to do, guys. We got to execute. We can't just sit here for an hour and a half and listen to somebody and don't do nothing. It's not, we got to do more. Appreciate the super chat, little Marcus. Thank you, man. Appreciate you. What's your thoughts on mutual funds? Not my thing. I don't mess with mutual funds. Why? Because they're actively managed. And what does that mean? You get higher expense ratios. 1%, 1.50%, 2%, 2.5%. Not my thing. See, here's the thing. Index funds and ETFs are passively managed. So they track an index or they track a sector. So mostly it's a computer algorithm, right? There's not somebody there individually, human being, picking stocks and putting them in a basket. That's what you get with mutual funds in most cases. Mutual funds are actively managed. That means there are human beings that are actually picking a basket of stocks. It could be whatever. It's actively managed. So anytime it's actively managed, they got to pay those people some kind of way, and you pay them through that expense ratio. So for me, early on, when I started doing 401ks, early on, back in my earlier days in the mid 90s, that's all they offered in my 401ks were mutual funds. There were no index funds. There were no ETFs back then. So it was mutual funds, or you do individual stocks. Or you could do bonds, that kind of stuff. So I had to start off with mutual funds, but I quickly, once ETFs and index funds hit the market, I quickly changed over to those because they were passively managed. I'm not saying there's nothing wrong with mutual funds. There are great ones out there. They're just too expensive for me. They're too expensive, right? The expense ratio is too much. I'd rather pay 0.03%, right? And get the S&P 500 than to pay 1.25% for some mutual fund that human beings are picking. It's just my thing. I'd rather go with ETFs and index funds because they're passively managed. They track a sector, they track an index, and the expense ratios are super low compared to mutual funds. But again, you got to do what's best for you. I'm not saying there are not good mutual funds out there. There are. Just too expensive for me when it comes to the expense ratio. So hopefully that helped and answered your question. So again, guys, we are an hour and 10 minutes in the thing. I'm gonna probably go till probably go an hour and 30 minutes today. Maybe not. I may go more. Just depends on what we got going. But for right now, we're about an hour and 10 minutes in, and I gotta ask you the same question. What's the game plan? What are you gonna be doing tomorrow, the rest of the month, the rest of the year? Do you have a solid game plan put together to build wealth? It's called the Great Wealth Transfer of 2024 for a reason. You should be planning to transfer some wealth to you. You transfer wealth to you by buying assets. They don't fall out of the sky and hit you on top of the head. You don't go to bed and have a dream and wake up and, oh, that's real. Nope, that's not how they get there. They get there by you taking the money that you earn, disciplining yourself, being consistent, being patient, taking that money and putting it into these assets we've been talking about for an hour and 10 minutes. Richard, I don't know what I'm investing in. Well, you've been on here for however long you've been in here. You should have heard what we said, or go back and watch the rest of the video once it converts to a video after the live stream. But that's what we should be doing. And I've told you, in my opinion, and this is just my opinion, if you're a beginner and you don't know what you're doing, then you should be in the S&P 500 ETF. That's it for now, until you learn a little bit more. You should always, in my opinion, have no more than 20% of your paper assets in stocks, individual stocks, unless you know what you're doing. Now, there are guys and gals in here that know what they're doing, and they can have more because they know what they're doing. But if you don't know what you're doing, you shouldn't. You should be 80% ETFs, 20% individual stocks, or 100% ETFs, no individual stocks. You'll be fine. That's all I'm telling you. If you don't know what you're doing, do not hang yourself out there to dry with 100% individual stocks. Don't do it. Don't do it. Please, do yourself a favor. Like I said, unless you know what you're doing and you have a proven track record of doing this, don't do it. Don't do it. I saw somebody ask something about bonds. And again, I don't buy any bonds. Well, Richard, why don't you buy bonds? Aren't bonds good? I guess. But I'm trying to build wealth. I'm not looking for a 4% return on my money right now. I'm looking for 8, 12, 15, 20% return on my money over the next 10 years. 4% ain't gonna get it. It's not gonna get it. I'll look for a 4, 5, 6% return on my money when I'm rich and I'm retired and I'm in the golden years and I'm looking to get income off the money. Then I'll maybe go look for some bonds and CDs and all that kind of stuff. But right now I need maximum growth. So no, I don't buy no treasury bonds. I don't buy no treasury bonds. I don't buy corporate bonds. I don't buy CDs. I don't buy none of that stuff. Not that it's not good stuff. It's just I'm not in that phase of wealth yet. I'm in the growth phase of wealth. So if I'm in the growth phase, I got to go find things that will give me an 8% return or better. And ain't no bonds out there that I know giving no 8%. Ain't no CDs out there I know giving 8%. Money market ain't gonna get it for me. Not for the bulk of my money. I needed an 8% or better growth. And when I say 8% or better growth, guys, and I'm not talking about every year, I'm talking about over a 10-year period, it has to average 8% over 10 years. I'm not saying it needs to do 8% every single year or 12% every single year, because one year it might do 5%, but the next year it might do 15. That's what I mean. I need an average of 8% over 10 years. And I don't know any bonds right now that's going to give me that. I think the 10-year treasury, I don't know, maybe what, 4.5%, something like that, 4.6, something like that. I don't know. Me personally, I'm gonna have 100% of my money in growth. If you want to have 30% of yours in growth, 70% in bonds, or 60 in growth and 40 in bonds, hey, it's your portfolio. You do whatever you want to. I don't need nothing in bonds right now. I need 100% of my money in equities so I can get the maximum growth. When I get to the old age golden years, then I'll move them out of equities and put them into bonds or CDs when I've already built my wealth. But while I'm building my wealth, I need 8% or better over a 10-year period. I need that. I gotta have it. So that's my 2 cents on bonds. Got nothing against bonds, but I don't buy bonds right now. I buy growth, fast growing companies, fast growing ETFs that grow faster than the market place. That's what I'm looking for. So hopefully that sheds a little light on it. Guys, hit that thumbs up while you're in here. I think we're gonna be in for another 20 minutes or so, and then I'm gonna sign off. So if you don't mind, while you're stopping in, hit the thumbs up. I'd appreciate that. Also, if you don't mind, go down to the description box. Check out those links for Moo. Check out the link for the website. Go check the website out. It's up and running. Got some great digital products on there that can assist you in the building your wealth. We also got the membership club that we're getting ready to kick off in May. So if you want to become a member of the membership club, go over and sign up for the membership club. Of course, obviously it's a paid membership club, just to keep it 100. You can sign up for free if you want to, but there are no perks. I'm not gonna lie to you. There are no perks for signing up for free. It's not, because if you're gonna just sign up for free, the YouTube channel is where you're at. The membership club is a paid membership club because I'm gonna be doing some extra stuff over there that I don't do on the YouTube channel. So if you just want to have free content, then the YouTube channel is perfect for you. I'm on here live streams every day, and I'm doing edited content every day. And I got a catalog of over 1,000 videos that cover everything from real estate investing to side hustles. So this is the perfect place for you if you want just free content and you don't feel like you need to pay for anything. That's okay. I'm okay with that. Just YouTube channel every day. You will be blessed. For those of you that want a little extra, you want a little bit of spicy, you want a little bit of instead of the regular chicken, you want some spicy chicken. Come on over to the membership club. There's a membership fee. You pay it monthly, and then you get some spicy chicken instead of just the regular chicken. But that's on you. That's on you. All I can do is offer it to you, but it's certainly on you. You do either or. I'm perfect with it. Right? I'm perfect with it. Either or, whatever's best for you. Well, let's keep moving on, man, because like I said, we got just a few more minutes in here. So any more super chats, any more questions through super chat, please go ahead and hit me with them. I appreciate to all the wonderful folks who did the super chats. Thank you so much. I appreciate you valuing who I am and not being afraid to invest in yourself. That's what it is, right? I appreciate you valuing yourself and not being afraid to invest in yourself. And then also valuing my time. Again, appreciate the super chats. Thank you very much. And again, what's the game plan? What are you going to do to build your wealth through paper assets for the rest of this year? Are you prepared? Are you set up? Do you have your target date? Do you have your target amount? Do you have your target net worth? And do you know exactly how much money you need to put in every single month to reach your financial goal? If you don't know those things, then you're not prepared. If you're coming in the live stream late and you didn't hear me explain all of that, you probably might want to go back and listen to the whole live stream once it once it's over and it turns into a video. You may want to go relook at the video because I explained all of that in the first 25, 30 minutes of the video. I explained exactly what those things are. But if those 4 things are not in place and you can't rattle them off right now, then you're not prepared. Any little financial bump in the road you hit, you'll quit. Because see, that's what prepares you for the hard times that are coming. The hard financial times that are coming, you get prepared for those and you put your financial armor on when you know exactly why you're doing all of this. That's the only thing gets you through it. But if you don't have a compelling reason to do any of this, you'll quit at the first opportunity it's convenient to quit, because that's what we do. That's what we're geared to do. We're not geared to build wealth. No one's taught us that. They don't teach us that in elementary school. They don't teach us that in middle school. They don't teach you anything about building wealth in high school. They don't teach you anything about building wealth in college. They teach you how to get a job. That's it. The wealth building thing, you got to learn that on your own. Ain't nobody going to teach you that. And most of us come from backgrounds where our parents didn't know how to build wealth. They were good parents. They took care of us. They put a roof over our head. They made sure we didn't go hungry. They did the best they could. So a lot of us are out here trying to figure this thing out on our own. We're out here trying to figure this thing out on our own. And that's okay. Nothing wrong with that. Nothing wrong with being out here trying to figure this thing out on your own. Right? Nothing wrong with that. Nothing wrong with trying to figure this thing out on your own. My thing is, hey, now that you know exactly what you need to do, the question is, are you going to do it? You know exactly what you need to do. The question is, are you going to do it? And only you can answer that, right? I can't answer it for you. You got to answer that. I've explained to you what I'm going to do. I'm buying on Monday. I'm buying NVIDIA and I'm buying Tesla, and I've told you why. And I've told you what my target buy price is, and I told you what my target sell price is. So I'm going shopping on Monday, but I'm going shopping for assets that actually going to put money in my pocket and actually multiply and turn into bigger assets over time. That's what I'm going shopping for on Monday. I already got my shopping list. I'm ready to go. Got my reserve cash. I know exactly what my game plan is. I know exactly what the exit strategy is. You got to know that stuff, guys. And again, if you're brand new and it's intimidating and it's overwhelming, all you got to do is send me an email. Richard, I opened my Moomoo account. I put money in it. I'm brand new. Guide me along the way. And I'll be more than happy to do that. It's that simple, guys. It's that simple. I return all my emails. All of them. All of them. So just understand that and know that. You're not alone. I'm here to help you, but I need you to help yourself first. I need you to help yourself first. And if you're willing to do that, then guess what? I'm willing to help too. I'm willing to share with you my experience. I'm not perfect. I'm not some financial advisor. I'm just a guy who's done it for 30 years, and I'm willing to share my experience with you if you're willing to accept it and execute on it. We got another super chat that's coming in from Ty here. Appreciate you, Ty here. Thank you again, man. Were you ever worried about school and college? My final semester of school, but I can't find interest in the schoolwork. Okay, so you're fascinated with investing. You can't. Here's what I'm gonna tell you, Ty here. Go ahead and knock the schoolwork out, right? Just get the degree, and because what it's gonna do for you is it's gonna allow you to have some options, right? The degree, in my opinion, doesn't guarantee success, but it does give you more options, right? It gives you some options. So lock that down, but do both, right? Lock that down, but do both. Make sure you get the work done in college, and then in your spare time, just devote that to investing, right? So for me, this is what I did. I went to college, obviously, and but I was different. I was an athlete, so I went on a full ride, and I was at a D1, University of Florida, and I didn't think about like you were way ahead of me, Ty, here. I didn't know what investing was when I was your age. All I was thinking about when I was your age was I'm getting ready to go into the NFL draft. I'm gonna make a bunch of money. I'm gonna be rich, and I'm gonna never have to work. Unfortunately, I didn't get rich. I didn't play that long. I played 3 years. I got hurt. So if it wasn't for the degree, I would have had less options because I thought I was going to play in the NFL for 15 years and be a multimillionaire at 30 and just kick back and do nothing for the rest of my life. But it didn't work out that way. At 26, I was out of the NFL, and I wasn't a first round draft choice, so I didn't make a big old signing bonus like they do now. I was a 6th round draft choice. I got $30,000 signing bonus. Of course, I blew through that because I had never had no money before. So this $30,000, get me a Pathfinder. You know what I'm saying? I'm going to have some fun. So I blew through that little $30,000 signing bonus. And the little money I made in my rookie year, blew through that. Then I signed another contract with the Bears in '92, got a $50,000 signing bonus, blew through that. Because see, I was thinking the whole time I was going to get this $1 million contract at some point, but I got hurt in my 3rd year and never got the $1 million contract. So had I not paid attention in college and got that degree, I would have had less opportunities. All I'm telling you is get the degree. It's going to give you more opportunities. Now, whether you use it or not, you don't have to use it, but get it. You've already paid the price. You've already been there. You're close to being done. Lock it down. Focus on getting that degree, and in your spare time, continue focusing on stocks, continue focusing on developing a skill set that you can turn into income and not give us so much of your time, right? See, the key here, guys, is I want to be able to take a little bit amount of my time, right? I want to minimize the time that I have to give someone, but maximize the income. That's the key, Ty, here. So while you're in college, what you should be doing, buckle down, get the little schoolwork out the way. But what you really should be doing is figuring out, how do I take my time and turn it into a giant income? How do I do that? See, if I had to do it all over, that's what I would have been doing. But I didn't have this. I didn't know. I didn't have anybody. All I knew was go get a job. So that's what I did. That's what my parents did. That's what my grandparents did. I just went and got a job because that's all I knew. If I had to do it over while I was in college, I'd do it all different. And that's what I'm telling you. Get the degree so that gives you options. But right now, you should be figuring out, okay, how do I take my skill set? How do I take my time? How do I take my interests, the things that I'm interested in, and how do I turn them into income without having to go to work for somebody? How do I do that? How do I do that right now? That's what I'd be focused on. That and investing. Get the schoolwork out of the way, but focus on, how do I take something that I enjoy doing right now and turning it into an income? That's what I'd be focused on. But I would get the degree, and I would just keep that in the back pocket just in case I needed it. I just keep it in the back pocket just in case I needed it. But boy, I'd be focused on right now, what can I do today? I watched this guy on YouTube, and he's talking about this and that and this and that. How can I take the things that I enjoy doing right now and turn them into income? I don't care what that is, Ty, here. Whatever you enjoy doing, turn it into an income right now. How do I leverage the internet? How do I leverage this 4.5 billion people who have access to the internet and create income? How do I add value to those 4.5 billion people and generate income? How do I do that? And how do I do it for a small amount of time, but I make a lot of money? That's what you got to focus on. That's what you got to focus on. If you focus on that until you get out of college, by the time you get out, you'll already have your business up and running. You'll be killing it. And guess what? As a young 20-year-old, you'll control 100% of your time. 100% of your time. That's where you want to be. That's where you want to aspire to. That's what you want to figure out before you get out of college. Don't be worried about getting out and going and getting a job for somebody. If that has to happen, no problem. It's plenty of them out there. What I be focused on is how do I have my own business when I get out of here? I got to leverage the internet, because that's what we got to leverage, guys. We got to leverage the internet, and we got to figure out how to leverage the internet to make money. That's all I did. Now, it took me a long time to learn that, but I learned it. And for the last 4 years, that's what I've been doing. I've been taking my skill set and leveraging the internet to do everything I need to do financially. That's what I do. I take my skill set, I add value to that 4.5 billion people through providing them something that can help them change something in their life. If you can do that, you'll be Gucci. Hopefully that answered your question. I thought we had another super chat here. Let me see. Yeah, we did. The Walla Mala. Appreciate you, man. Appreciate the super chat. What if the 900-pound gorilla, MVDA, becomes anorexic, turns into a 9-pound gorilla? Would you continue buying the dip, or does too low mean too low to buy? Well, here's the thing. That's the reason why, guys, you gotta have an exit strategy, right? That's why I tell you guys, you gotta be 80% ETFs, 80% index funds, 20% stocks. See, if I put $50,000 in the video tomorrow, and the value it just never comes back, will it sting? Yes. It will sting, but it won't cripple me. It won't keep me from my financial freedom, because I got 80% of my money in different stuff. So all I'm telling you is you got to diversify yourself. I can't now. If I got 100% of my money in the video and it keeps falling and something crazy happens, CEO get ran over by a bus, whatever. Oh yeah. I'm hurting, but I ain't gonna never do that. I know better than that. I will never have more than 20% of my money in individual stocks, ever. So I ain't gotta worry about that. Now, like I said, will it sting? Yeah, but guess what? I've lost before. The only thing saved me is 80% over here. That's what saved me. I done lost on stocks before, guys. But what saves me is I'm over here not being the expert with 80% of my money. That's what saves me. 20% of my money, I done made some good money, but I done lost some money in stocks. That's why I don't invest all my money in stocks. So yes, if it turns into a baby gorilla, it's a giant gorilla now, but it turns into a baby gorilla, will that sting? Yeah. But it won't stop me from doing what I gotta do. So you gotta understand, I got a high income skill set, so I make a lot of money. Plus, I got 80% of my money in over here in ETFs, index funds, well diversified. So even if I miss over here, it doesn't cripple me. I patch myself up, get back up, learn the lesson, but I keep moving. So don't never put all your money in individual stocks. Like I said earlier, never put all your money in individual stocks. But please understand, when we invest in assets, guys, there's a level of risk associated with that. It is. There's always the opportunity when I buy a piece of real estate, I can lose money on that real estate. There's an opportunity if I start a business, I can lose money on that business. There's an opportunity if I put my money in the stock market, I could lose money in the stock market. That's just life. If I invest, there's a possibility at some point I could lose something. Now, do I believe that's going to happen with NVIDIA based on, history? No, but it could. But I'm prepared for that. I know that. I know the risks associated with me putting money in NVIDIA. It could potentially not work out. But that's a risk I'm willing to take. Based on what I know, it's a risk I'm willing to take. Same with Tesla. It's a risk I'm willing to take. For some of you guys have been watching the channel for a while, I've been investing in Tesla. I got a long-term position in Tesla right now that is probably 40% down right now. Long-term position is 40% down. Do I lose any sleep at night? No. Because I know I'm in that position for 10 more years. And I believe in 10 more years, I'll be okay. So what I do with NVIDIA, even though it's a short-term move, if I get caught with my pants down, I'll just stay in it for 10 years. I won't invest anymore. I'll just take that lump, put it aside somewhere and forget about it for 10 years, and hopefully it right-sizes itself in the next 10 years. I'll just stop investing in it, but the investment that I do have, I won't sell. I'll just hold it, just like I do Tesla, just like I did Bank of America in 2008 when it crashed. And half of my Bank of America stock, well, it went from 100% to 50%. And what did I do? I didn't panic. I just left it in there. And guess what happened to it? Over the next 12 years, it right-sized itself and I made some more money on it. So that's all I'm saying, guys. You got to be prepared to hold this thing and stay in there for the long haul if it's necessary. I'm prepared to do that. Even though it's a short-term play, I'm still prepared to stay in 10 years in the video if it goes sideways on me. I'm okay with that. But guess what I keep doing in the meantime? I keep earning and I keep investing in other things. I keep earning, keep investing in other things. So if it don't work out, it won't destroy me financially is what I'm saying. So hopefully that answered your question. But good question though, because that could happen. I hope it don't happen, but it could. NVIDIA could go sideways, but anything else can go sideways, right? So we just got to make sure we understand the risks associated with putting money in these investments. If we're going to put it in there, we just really got to understand the risks, right? We just got to understand that any company can go to zero. Now, the likelihood of that happening is not good, but it could. So be prepared. And the way I protect myself is I do the 80-20 split. That's how I protect myself in the stock market. Kappa Owens, thank you for the super chat. Appreciate it. Just a thanks for all of the daily free value you give, Mr. Fain. I'm so low level at investing, but your daily lessons give me the confidence going forward. Thank you so much, Kappa Owens. That lets me know that what I'm doing makes a difference, right? It lets me know what I'm doing is making a difference in people's lives. And honestly, guys, that's what it's all about, right? It's all about making sure, because if it was just to get a bag, I wouldn't do these every day. If it was just getting a bag, I wouldn't do this every day. All I got to do is one video a week. And guess what I would do? I would just attach a whole bunch of make-believe stuff to the video. Oh yeah, do this and I'm gonna get you, give me $1,500 and I guarantee you 55% return in 2 days. All I gotta do is do that. If I'm just trying to get the bag. Oh yeah, come down to my funnel, get down to that free webinar. We're gonna guarantee you, show you how to buy real estate with no money, no low credit score, no job. We're going to teach you how to do that. All you got to do is get down to the free webinar and then we keep on upselling you. See, I know how to make money if I wanted to just make money and that's it, guys. So I wouldn't have to do this every day if I just wanted to make money, because I could just do it once a week and just promise you a lot of lies and underdeliver. That's all I got to do. All I got to do is play to your emotion of instant gratification. Promise you the world through instant gratification. I could do this once a week and just do that. And trust me, I can make a lot of money doing it that way. So I don't have to do this every single day if that's all I want to do is make money. That's what I'm trying to tell y'all. There's so many people out there that don't want to pay the price. So many people that want to cut corners. All you got to do is appeal to them. Why do you think these scammers, these grifters, these con people, why do you think they make so much money on YouTube and on these other platforms? Because there's so many people out there that don't want to pay the price. There's so many people out there that want shortcuts. That's who they appeal to. I'm a guy that's on here every day telling you it ain't going to be a shortcut. It's going to be a hard process. It's going to be long term. Nobody don't want to hear that. Most people don't want to hear that. So they're not going to stick around. They're not going to stick around to hear that. They don't want to hear that. But that's what I say every day on this YouTube channel. That's not how you make $1 gazillion, guys, is by telling people the truth. You make $1 gazillion over here by lying to people. That's how you make $1 gazillion. Let's get it straight. If I wanted to make $1 gazillion, all I got to just get on here is just lie. So, oh, guys, send me $30,000 and I got a whole setup for you that's going to make you $100,000 a year. All you got to do is send me $30,000. I'm going to set you up on an automated type of blah, 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 and you'll make $100,000 a year. All you need to send me is 30 grand. All I got to do, guys, is do one video a week, lying to you like that, and trust me, there will be people that'll pay the 30 grand. It's that simple. But that's not what I'm on here doing. I'm on here every day telling you the same thing. Discipline yourself, be consistent, be patient, give yourself 10 years. I tell you that every day. So I'm on here for the right reasons, whether you want to believe it or not. And I know 99% of y'all know that. There's a 1% out there that's just knuckleheads. What are you going to do, right? So yeah, I'm with you. I appreciate you, Capo. That goes a long ways. And I appreciate you, believing in me and investing in yourself and understanding that what I do it to help people. But that doesn't mean I don't have a right to get paid. No, I do have a right to get paid. And I'm not going to ever hide from that. Never going to hide from getting paid for adding value to someone's financial life that helps them get to what they need to get to. Nothing wrong with that. Nothing wrong with that. Nothing wrong with that at all. So I thank you and appreciate you for understanding that. And I know, like I said, 99% of you guys understand that and rock with that, and you're okay with that. And like I said, the membership club, if you don't rock with that, don't rock with it. You got free information right here. But again, what's going on in the membership club is going to be different than what you're getting right here. I'm telling you, it's going to be different. It's going to be different. So again, you got to figure out what's right for you. I'm going to do what's right for me. And I have done that for the last 30 years, and I'm going to continue to do it. But I'm never going to put money before people. I'll always put people before money. Always. Because I know if I help enough people get what they want, ultimately I get what I want. It's a win-win. And that's what I'm about. I'm about a win-win here. I'm not about I win, you lose. I'm not about that. I told you, if I was about that, this channel would be a whole different channel, brother and sister. It'll be a whole different channel. If I was about me winning and you losing, it'd be totally different. I got so many people email me every single day trying to get access to y'all through all kind of shady stuff. Oh yeah, we're gonna help you do a 250% more income if you just allow us to help you. Allow us to get access to your subscription base. Give us let us email them. I get that all the time. And I know that's just a scam, right? I would never subject you guys to that. Never. It'll never happen because that's putting money before people. And I'm not going to rock like that. So I appreciate you guys. I guess we're going to go ahead and close this thing out. We've been on here long enough. I thank y'all so much for being patient with me. I thank everybody for the super chats. You guys understand investing in yourself is the right way to go. I appreciate that. Thank you so much. Thank you for everybody that had some opportunity to pop in and out of this thing over the last 2.5 hours, almost 2.5 hours. It's been wonderful. Again, like I said, if you're interested in those that Moomoo offer, go down to the description box, click on that Moomoo link, get yourself 10 free fractional shares of the Magnificent Seven. If you're interested in checking out my website, that's the second link down in the description box. Click on the website link, Richard Fain Millionaire Mentor website, and certainly go ahead and take a look at the digital products we got available for you to help get you to your pot of gold at the end of the rainbow. And then obviously consider getting yourself in the paid membership group where we're going to be doing some exciting special things starting in May, where we're going to be doing these live streams and they're going to be lit, right? They're going to be lit. We're going to be deep diving into a lot of this stuff that I just cover at a 30,000 foot level when I'm on the YouTube channel because I just don't have the time to do it. So we're gonna dive into those. The big difference is on the mentorship live streams that we're gonna be doing. The big difference is you guys are gonna be giving me the topics. You're gonna say, because I'm gonna send you an email through the membership and say, okay guys, what do you guys want to discuss this week in the live stream? And then once I get the responses back, those are the topics we're going to cover. So if someone says, hey, Richard, I really want to cover side hustles, but not just, okay, do this. No, I want you to go pick 2 or 3 side hustles and just take us through those side hustles, A to Z. That's what we're going to be doing. Hey, Richard, I'm thinking about buying a piece of real estate. Hey, take us through not just what you need to do, but take us through the cash flow. Take us through how you come up with a cash flow analysis, that kind of stuff, right? So it's going to be totally different. And I think it'll add a lot of value to those that need value added. Now, if you don't need value added, the YouTube channel will be here. I'll be back. I'll be on every day. If you don't need that added value, stay your butt right here on this YouTube channel and you're good to go. But if you want added value and you want to, like I said, you want spicy chicken and not just regular chicken, get over to the membership club, pay your membership fee, get you some spicy chicken. If you don't need the spicy chicken, get you some regular chicken over here on the YouTube channel. It's good to go. So appreciate you, man. Don't forget about that Instagram link down in the description box. Click on the Instagram, follow your boy on Instagram, and let's get this Instagram page built up like we had the old one. I appreciate your support there. Thank you, guys. Enjoy the rest of your Sunday. I'll be back tomorrow morning, 10:30 a.m. Eastern time with more financial information. So be prepared for that live stream. Thank you so much for rocking with me. Thank you guys so much for being so generous to me. Thank you guys for changing my life for the better by allowing me to spend time with you every single day on this YouTube channel. Thank you. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'm going to catch you guys on the next one. Peace.